Well, let's get some more on the overall markets. Chris Weston, IG, Chief Market Strategist, joining us from Melbourne right now. Chris, great to see you as always. Just on the economic data and what that did to the greenback there and the impact that had in resulting markets, it was pretty interesting to watch.
Absolutely. I mean, it was probably helped out by some other factors on the other side of the equation. For example, what we're seeing in the UK now, the YouGov poll suggesting that the yes votes, i.e. for a separated country, was gaining some power as well. And certainly there was a lot of people looking to hedge out some of those sort of political risks there as well. Sterling was decimated. But yeah, I mean, if you look at the dollar index, which is the broader basket, we're at the highest levels now since July 2013. And I think it was also amazing to see a sell-off in the bond market. Something we haven't been speaking about for quite some time, not just in the US bond market, which absolutely deserved to be sold off given the absolute strength of the manufacturing numbers we saw in the US, which are just absolutely showing the rest of the world how it's done at the moment. But we also saw a sell-off in the long end of the curve in the European bond market, which is, again, something that we haven't been seeing for quite some time. So I think that told you a real story about how the ISM manufacturing number in the US went. If you look at the sub-components within the ISM manufacturing numbers, if you look at the new exporter, if you look at the new orders component at 66.7, that was the highest since April 2004. And why we look at that number, because if you take that number in isolation, the new export numbers, the new orders subcomponent, it has the strongest correlation with actual GDP. I think going back to 2001, there's about a 73% correlation with GDP. That suggests to me that the Q3 GDP number in the US is probably going to be around about 3.5%. Bear in mind the consensus at the moment is for a 3 handle at the moment. So that's a good number, and that puts upside there. So certainly the US dollar got a bit of a bid up on that number, and I think all the leading indicators now are suggestive that the non-farm payrolls number on Friday will be above 200,000, in line with pretty much all the averages out to 2 years. So very, very good numbers last night coming from the US economy, and it shows you if you want to look at capital, there's two things you can look at. You can look at liquidity, and therefore Japan and Europe are still quite attractive, or you can look at absolute growth, and that's why people like the US there.
There is so much to consider for the local market today. What's your opening call?
Pretty flat, actually, to be honest, Bridie. I mean, it's not really giving it too much away. We're still, you know, at 6-year highs around that kind of level, which is great to see. Growth-wise, obviously, people are going to be looking at the GDP numbers at 11:30. The consensus there is for 40 basis points. We've also got Glenn Stevens speaking, so there may be some currency moves coming through today. Obviously, the Aussie was offered a little bit in line with what we saw with the Kiwi and some of the other currencies yesterday. I think it was more a US dollar move than anything else that we saw coming through yesterday, as dollar yen broke out through those through the recent highs, created a higher high. I think as well, I think Japan's going to be very interesting today. As we go into the back end of the day, around about 3 o'clock our time in Sydney time, we've got this cabinet reshuffle that's coming through. If you look at the yen yesterday, got sold off quite aggressively, put a massive bid back into the Japanese market, which put positive ramifications in the ASX 200 and US futures as well. So there's going to be some cabinet reshuffle. Some of the people coming in are expected to be much more proactive in terms of changing the portfolio allocation towards the government pension investment fund, which obviously is bad for the yen, good for the Nikkei. So that could be a catalyst as we go into that final hour of the day. I think that's going to be very interesting as well. So opening calls, not particularly great day in terms of commodities. I heard you mention the Brent price was hit pretty hard. I think that was driven predominantly by a move lower in gasoline. RBOB futures were hit pretty hard yesterday as well. Iron ore continues to go down. You know, it's a tough time to be long iron ore stocks at the moment. You've got to be the biggest of contrarians in that space at the moment. But yeah, we're flat open for the market. BHP's ADRs, for example, is down about 14 cents. So yeah, we'd expect to see a little bit of stability in the banks to hold up the material space here.
Just as an aside on iron ore, Anglo American coming out, the boss Mark Cutifani telling the Wall Street Journal that he's worried about the outlook for the iron ore market and saying, look, with ever more iron ore being produced, prices are only likely going in one direction, and that is down. So, yeah, that's the view from Anglo American there. Of course, it's an iron ore producer, but obviously different to what we've been seeing from BHP, Rio and Vale, which have been really ramping up their output.
Well, that's the key, isn't it? I mean, the big three have been increasing, and that supply coming on the market has naturally seen iron ore and iron ore futures and rebar coming under serious pressure. I mean, the iron ore spot price is down, has only had 2 rallies out of the last, I think, 17 sessions. So it is oversold, but I wouldn't be looking at technicals on a commodity like iron ore, for example. But you know, I mean, you can look at the actual producers, the price takers here, BHP, Rio. I mean, we did see comments from BHP suggesting that they don't see a rebound above $100 anytime soon. So, look, I mean, we're right on those lows, the 2012 lows at the moment on iron ore. So, as I say, you've got to be the biggest of contrarians to be long this space right now.
Just on to the ECB, because obviously that's still the big looming risk as well for markets. Did there seem to be a growing view now, worry that, you know, maybe too much has been priced in that the ECB can do this meeting or even talk about this meeting? Are there risks of disappointment?
Absolutely, absolutely. I mean, I want to be long euro dollar, but it's just really tough at the moment to be long. I mean, I think we are undervalued a little bit on euro dollar and certainly euro crosses, and certainly we're very much oversold technically here. But I mean, we've got to look at the bond market. The bond market is absolutely key behind this trade, and Mario Draghi has talked about inflation expectations. Inflation expectations now, we look at the five-year swap here, and they have rebounded a little bit in the last week or so. I mean, when Mario Draghi was talking, the expectations were at 1.94%. They've rebounded back up to about 2.03%. So I think that's just an expectation now that Mario Draghi will not unveil a quantitative easing program, but probably could pre-announce some sort of quantitative easing program. I don't believe he will, and as a result, I think we could probably see a bit of a sell-off, especially in the front end of the bond market. We've got negative rates. If you look at 2-year rates now, in about 5 or 6 different European countries. You take Switzerland as well, where their 2-year yield is actually negative 11 basis points. It's pretty much telling you that the market's going to have to counter, Switzerland, the Swiss National Bank are going to have to counteract in pretty big size here. But clearly, you've got a situation now where the market has priced in negative yields in the front end. They've priced in further negative deposit cuts in Europe. You know, if he doesn't deliver, there is going to be a pretty sizable sell-off, I think, in the front end, and I think the euro will probably catch a big bid. But yeah, I think Mario Draghi is very much in tune with financial markets. So I personally believe we're going to get a rate cut across all 3 major interest rates. I don't think he will announce a quantitative easing program. I think he'll probably pre-announce an asset purchase program in the sense of asset-backed security buying, which is very different from government bond buying, which I think they're a million miles away from doing at the moment.
Chris, it's going to be a big day. Can't wait to see your analysis as it all unfolds. Thank you so much.
Thanks, Bridie.
Chris Weston.